Mortgages matter because when people buy a house and take out a mortgage, they're usually borrowing a very large amount of money relative to their income. It's not unusual now in the UK for people to borrow 3.5, 4 times their annual income. That's an amount of debt that's going to be around for a long time. If people make the wrong choices, they take the wrong kind of mortgage, or they borrow too much relative to their ability to repay, it's really going to mess their lives up. I think a lot of these issues in the mortgage market, and whether people are taking the right kind of mortgages, how they should be regulated, become more and more important the more people are borrowing relative to their income, relative to their lifetime income. And I'm looking at situations in which we might expect to see house prices, which are already in the UK much higher relative to incomes than was the case 20, 30, 40 years ago, whether we might expect there to be a continuing upward trajectory in average house prices relative to average incomes. Some people talk about that as being an unsustainable situation, that must be a bubble, that house prices can't rise faster than incomes over a sustained period. Could be perfectly sustainable under quite plausible economic conditions. If that does turn out to be the case, it seems to me that there are a number of implications. Let me mention 2 in particular. Firstly, it is very likely that the age at which people can buy their first property will be pushed back in time. What that means is that the size of the private rented sector is likely to need to be larger. And there's been a direction of policy in the UK which is actually inconsistent with that tendency. I'm thinking in particular about recent tax changes which make it more costly for individuals to buy property to then rent out. There's been a change in the tax system which in a sense discriminates against the private rental sector. That's very unfortunate. There's a second implication, which is that if it's true that people will be needing to borrow even larger amounts relative to their income than we've seen in recent years, then the risk characteristics of mortgages might need to evolve. And in particular, there may be a growing advantage in having mortgages where the amount that you repay on the mortgage each month is linked not just to an interest rate which is independent of the value of your particular property, but rather that the amount that you repay on the mortgage is linked to what happens to the price of your property. That's a way of sharing house price risk with the providers of funding. And the advantage of that kind of risk sharing are larger the more expensive on average houses are relative to people's incomes. Just before the financial crisis, close to 70% of people in the UK owned their own house. The remaining 30%, one way or another, rented property. We may be on a trajectory now consistently where the owner occupation rate declines, and we shouldn't be surprised if perhaps 20, 30 years from now, the owner occupation rate was at 50% rather than the 70% we used to think was normal just a few years ago.